It's recording. Should be recording. Yeah. Right. So this week was a pretty horrible week to trade. Um, just pumped all week. Um, After this horrible week we were just consolidating. So yeah, we just went for all-time highs again. And I mean, a lot of people and myself as well got caught up on just trying to catch this top, which didn't go as planned. But yeah, it's one of those weeks where risk management is like the thing that's gonna save you. So if you don't have good risk management, it's weeks like these where you're just gonna blow your account. So to start the week off, we had no monthly cycles sequential SMT. We had this 4-hour PSP here. A 4-hour PSP here. Trade into the wick, and this just kickstarts the whole move up. So close bearish on NQ and bullish on YM. Going into Monday, so we had no, as we call what, higher time frame sequential SMT. So there's no SMT with Friday, I believe. So what we did until after, what's this? Looking at them. This isn't, what's wrong with this indicator? Okay, here we go. Yeah. So Monday at open, Dow dumps. It took out Friday's low, and then that's kind of what kept this moving. There was no real way to catch this move, given that we trade from 9 to 10:30. So there was no trade that we could have taken on Monday. So after that 4-hour PSP formed, we traded, yeah, NQ, YM dumped, took out Friday's low. That gave us weekly cycle sequential SMT. So that's number 3. And then if I go on to the 5-minute chart for the 90-minute cycles, as soon as YM closes here, so as soon as YM closes here, down here, 905, that gave us hidden sequential SMT, right? Also gave us regular as well, actually. So then this came here. But this happened before the weekly cycle sequential SMT formed, which meant that to catch this move, there was no 2-stage really. So this wasn't something that we could have caught. There are no PSPs that formed here other than the 4-hour one before. So this move, unless you were trading based off of just this, then you wouldn't have been able to catch this move. So Monday wasn't really something that was tradable. Going into Tuesday. Tuesday was a day that we could have caught a move. So we have Monday's low here. This is Monday's low. Obviously we have a failure swing with NQ and ES, but then YM ended up taking this low. So that's first stage. That's stage 1, which is a higher time frame sequential SMT, right? And we also have, with that, we have this 1-hour PSP that formed here at 9 a.m. So when this 9 a.m. candle closed, it formed a PSP, we traded into it, and then we went higher. If I go on to the lower time frame, I believe it was a 90-minute. You can see here how so we can see that this is the low of the third quarter of New York AM, and then same here on YM. You can see at 10:25 we take this low. Or actually, no, it has to be 10:30, wouldn't it? So at 10:30, well, we still take this low, don't we? So this low is still being taken. So here, this is the low swing. This is the lowest swing low, and we're still trading below, right? So this is the low of Q3, and then we trade below it in the fourth quarter. That's it. Now what you could have done is waited for, I believe, a 5-minute PSP. So was that 5-minute PSP here? We trade into it. So the same over here. It's here. So this candle here, 10:50, gave us a 5-minute PSP on the lows, as well as this. You have this failure swing here, and then we trade higher. So this was the move you could have caught. I kind of go into the new models that I've adapted after this. There's some stuff that I've been looking at, and yeah, some pretty cool stuff. So, but just add to that, I'm kind of going to be changing that. We originally had that 9 to 10:30 rule of trading, but I'm going to be changing that, for my trading at least, to 9 to 11 a.m. So it's given me an extra half an hour to, if we don't have that lower time frame sequential SMT between Q2 and Q3, we still have an opportunity to catch it. So over here, between Q3 and Q4. So we have this. And this is still going to give us the opportunity to catch the move. So from 9 to 11 a.m. now, I'll be looking for entries. So that extra half an hour, and it would have been here on this 5-minute PSP. You can see we could have just entered on the close if you wanted to. I'm not sure the 1-minute chart looks like, but then your targets obviously would have been this high here, potentially. It's a previous day high. Right? And that's a 1 to 5 RR trade. But if we go onto the 1-minute chart, for example, let's have a look. Where is it? You could have caught this move. I believe this 1-minute PSP that formed inside of the 5-minute PSP. So this could have been potential entry, and you can see there's another cracking correlation here. This is, I guess I would also classify this as SMT fill. I don't think I mentioned this before, but we can see how we trade into the wick of this 1-minute PSP here, but we failed to do so on ES, and that's a cracking correlation on its own. So then you could have entered on either the close or the 1-minute PSP here, or you could have entered when we tap the wick. And that's a 4-point stop loss, and then you're still targeting that previous day high, wherever it is. Previous day high here. So it goes from, using a 1-minute PSP, that goes from 1 to 5 RR to 1 to 22, and that's how we can catch these snipes, right? So that 1-minute PSP is the bottom of that 5-minute PSP, and we kind of talked about that and how that open, high, low, close logic. So when we open here, we make the low, and the aim is we go into a lower time frame to catch the low of that precision swing point, right? So that was the logic with that entry. So we're using a lower time frame PSP to catch the top or bottom of a wick of a higher time frame PSP, right? So 1-minute PSP inside of the 5-minute PSP. Yeah, this is Tuesday. 1-minute PSP inside the 5-minute PSP to catch this move, right? And that's after we've had stage 1 taking out previous day low, and then stage 2 taking out the Q3 low of the session. And then Wednesday, I don't think there was a way to have, what's the 4th? Wednesday, there was no real kind of way. We just kept expanding higher. There was no we did not take out Tuesday's low, so there was no higher time frame sequential SMT to look to take a trade. I think there was a, I believe there was a daily cycle sequential SMT. So here you can see how YM is sweeping London's low, and then of course we're failing to do so here. And this isn't our higher time frame sequential SMT, right? So part of our model is higher time frame than lower time frame, and then this is just lower time frame. It's only one stage, so this isn't something that we could have caught. But kind of with this new system I've developed, like with I've kind of basically made 3 models over this back testing that I said I'd done, and it's kind of, there was a way to have caught this move with one of these models, which I think I might go into at a later date. But for now, we're just sticking with the higher time frame and lower time frame sequential SMT. So this would have been a no trade day once we've seen that we've just expanded away from Tuesday's low. So there was no way we could have caught this move. But of course, we had this daily cycle sequential SMT. We had this 15-minute PSP that formed at 9:30, and then we trade into it, right? And then move higher. So that's what kind of gave us this move. And then Thursday as well, I believe there was a weekly cycle sequential SMT, gave us kind of a Thursday reversal. So on Thursday we took out Wednesday's high, right? So Wednesday's high was taken out on NQ and ES, so stop one, and then we left it as a failure swing on YM. So we had a failure swing on the high on YM. So this was stage 1. And then second stage would have been on the 90-minute cycle, where we took, where is it? Oh, there wasn't. Maybe there wasn't. 9:30. So 9:30. Here. 9:30 failed to close above the high of the second quarter on YM. And then NQ closed above, right? So this is hidden 90-minute cycle. And then this also was a 5-minute PSP. And I think I did go over a little trade recap on this. I'll just go over it again. First stage weekly cycle. Second stage was this hidden 90-minute. And this also became a 5-minute PSP. And it remained as a 5-minute PSP on ES, but it was turned into a precision candle on NQ. And remember that we only need it to be a PSP on one asset for it to be a swing point, right? For us to use it. So even though we kind of took the higher of that PSP, turning it into a precision candle, that was essentially a turtle soup on the 1-minute time frame, also giving us 1-minute PSP. And I did end up taking a short here, or it was like this, with a stop at this high, targeting this low, I think, and also going for these equal lows. I'm pretty sure that was the target, right? So yeah, this was the trade that we took on Thursday, which was valid, right? Cool. And then Friday, just kept expanding higher, right? And what happened on Friday? So Friday we had a weekly cycle, or this wasn't a weekly cycle sequential SMT because this candle was the first candle of the first quarter, right? So this wasn't first day slow, and this wasn't a weekly cycle sequential SMT. If you want a 15-minute time frame, I believe we had a daily cycle. So this is, if I get rid of the wicks, you can see this is Asia's low and Asia's low, and we have hidden sequential SMT here, right? So when we close below this low, 545, and we fail to here, that is hidden sequential SMT. So that was that lower time frame sequential SMT. And then to move higher, I believe we had another sequential, another hidden 90-minute. So we close below the low here of Q1, and then Q2 we close below YM, and of course we failed to here. So this is hidden sequential SMT. And then you can see we have these precision candles here on the 5-minute chart before NFP, and we closed, of course we didn't close below, so it was treating this as a gap, right? So we had daily cycle hidden and then 90-minute cycle hidden, which sent us higher. And then I did take a trade here, so we had a 5-minute SMT fill. I believe we had a 5-minute SMT fill here, so 5-minute SMT fill and a 5-minute PSP here, and then my entry was on the close of this 5-minute PSP. So stop here, and then you can see, well, of course I got stopped out here before we went higher, right? So that was also a 15-minute SMT fill. So a possible entry that you could have got on this if you were looking to take a trade was this 15-minute SMT fill. So we trade into the gap and we pump higher, and then we fail to trade into this gap. And then that was Friday. There was no real way that we could have caught a move every single day of the week. It's not our model, and as I mentioned in trade breakdown, I kind of fell victim to trying to catch this top, right? And I took a few losses which I shouldn't have taken. Precision breaker, where was that? Was that on Friday? Anyway, yeah, so that was this week. This week was a difficult week, right? It was just up. So there's no real way we could have caught a lot of moves this week, and it's just those, yeah, as I said earlier, it's just one of those weeks where risk management is going to be your best friend, you know. So yeah, it's not a week where you should, you know, like beat yourself up and say I didn't get to take as many trades as I wanted to. In terms of next week, or does anyone have any questions on that? There's not much to really go over. It's just all that that's that 4-hour PSP. This one, that just so price higher. TDB, what's TDB? Oh, TPD. Yeah, so TPD is just that higher probability PSP. So here's examples here with that 4-hour PSP actually. So you can see here. Where is it? Oops. So we have a 4-hour PSP here, right? There's also a cracking correlation between here. It's pretty difficult to see. What is it? this one. Oh, this is not TPD, my bad. Looking at the wrong candles. I'll just draw it out. So, TPD is when we have something like this. I'll just draw it out. It's not something that I specifically look for. I know a lot of people do like using it, but it's not something that I exactly use. So this is a normal PSP, right? Do you agree? So the swing height, and then the middle candle is a different color. Then what TPD is, it's something like this, where we have another divergence between the close of the first candle of the swing point and the open of the third candle of the swing point. So close and open. This is TPD. So it's that divergence within the PSP. Yeah, it's just a higher probability PSP. But yeah, not something that I look for. Yeah, so it's a PSP, which is a cracking correlation on its own. But then at the same time, we have this divergence between candle 1 and candle 3. So the close of candle 1 and the open of candle 3. Yeah, hope that makes sense. In terms of next week then, come to the weekly chart. In terms of next week, we've just formed a weekly PSP, right? So this PSP, or this precision candle for now, we'll see if it's a PSP. But I would expect that this is going to be the trigger for a more of a bearish move, which is what I'd like to see happen. So you can see, however, how close NQ is to the top of this. So we'll go on to the 1 hour chart. On Monday, I probably expect bearish price, right? So you can see how close. So I'll just draw up Friday's high. Friday's high. Friday's high. And then Friday's high is here. So you can see how close NQ is to taking this high, but then how far away ES is from taking the high. And if we also draw a range here, you can see how we have another cracking correlation where ES has traded into discount and then NQ has failed to do so. So this might lead NQ to take this high, and then we will most likely get a failure swing here, sending slower. Another possible scenario for Monday would be, given how close YM is to taking this low, we may have a weekly cycle on the lows, right? So this is Friday's low here, Friday's low here. It's possible that we get YM taking this. So YM takes low, moves higher. NQ, of course, gets a failure swing, trades higher to take this. And this is going to be that Magneto effect, right? So we have weekly cycle on the lows, which will give us weekly cycle on the highs. And this is a possible scenario for Monday. And then as it happens, ES will trade into the wick and treat it as a gap. So what ES may do, trade lower, of course, when YM creates this failure swing at the high as NQ takes that into the weekly gap and then lower. So that's something that we can expect. So I'm trouble integrating PSPs. Can you go over an example of the charts and how to enter them again, please? Yeah. So we know what our PSPs are, right? So as I just drew it, it's that we have a swing point and then the middle candle. So of the swing point is, I'll just get it back up again. Where is it? Where's it gone? Second. There it is. So this is a PSP, right? Do you agree with this is a PSP? Cool. So what it's going to do is it's the wicks of these. So say the wick, this is the top wick. These can be treated as a gap. So this could be a gap. So a gap that price can trade into and trade lower from. That's the first thing. They can pretty much confirm our reversals as well. And they can confirm our sequential SMTs, but work without sequential SMT. So we don't need them, but they can confirm our sequential SMT to happen, right? So how it would look on the chart would be, for example, let's go into, let's have a look at, let's get an example. Look at Tuesday. So Tuesday. Okay. Tuesday we had a 90-minute cycle sequential SMT here. There's a 90-minute sequential SMT. And then we had, what gave us this move was when this 5-minute candle here at 10:50 closed bearish on NQ and DS, but then closed bullish on YM. So then this becomes a precision swing point. We trade into the gap and then higher, right? So that's how we can use PSPs. Does that make sense? Kind of how to integrate them. It's just confirming our reversals and stuff, and we can use them as gaps as well. How do we know if it's going to be a PSP before the third candle forming? A lot of the times you can expect it. So for example, how do I explain this? A lot of it's screen time as well, to be honest. Just you get used to seeing them forming. But if I have, let me find an example of one. Let me find an example. So here, this candle here was 6. Actually, I think that was a better example. So the 6 o'clock candle here, the 6 p.m. candle here at the start of Friday was a 1 hour PSP, right? So traded into the gap, into the wick, traded as a gap, and then went higher. So, and then that was this one here. So this was a 1 hour PSP. Now you can see when we have, it's usually predictable, where you can see how we wick low, we move lower and then give us wicks like these, and then for example on the swing low we close bullish, so we wick lower, closed bullish here and closed bearish on here, and then price, of course, it was here, right? It closed up here. Given that this closed as a precision candle, and it closed all the way up here with a wick like this, it's easy to it's kind of, you can anticipate that this won't get taken. This will remain as a PSP and not a precision candle. Is that what you're asking? A lot of it's just screen time and being able to seeing loads of PSPs form. Does that make sense? Does that answer your question? Sometimes you enter them before the close of the 5 minute. Yeah, so it's like what I said earlier. So if I draw this out, yeah, as I said, it's predictable when we have a PSP forming, right? So maybe 4 or 5, so if it's a 15-minute candle we're looking at, 4 or 5 minutes before the 15-minute PSP forms, we can see how NQ is above the open of that 15-minute candle and ES is below, for example, right? So you can see how price is diverging at that time relative to the open of that candle, which is is showing you that a potential for a 15-minute PSP to form. So what I mentioned earlier was, say if we have a look at this. This is a 15-minute PSP. So 15-minute PSP. Here. Now we have the wick. We have the top wick here of the candle. Now, if we zoom in here, there's going to be some reason on the lower time frame, for price to reverse here and move lower, right? So if I zoom in to the, oh, I'm done. So if we zoom into this candle on the 1 minute time frame, for example, so this is a 15-minute PSP, and if we zoom in over here on a 1 minute chart, we could have something like this. So we have the open of 15-minute candle. So the open of the 15-minute candle here. So this is here. We trade lower, we make the lower wick, of course, and then we're doing this. This is essentially what's happening in the 15-minute candle, right? So that should be something like this. And then we have close of the 15-minute candle. So this is basically what's happening inside of this swing point, right? And then on another chart, it'll be doing the opposite of this, making a bearish candle. The logic is that we want to catch, so the way I do it is obviously a 1 minute PSP, is we want to catch this part here that gives us the top. So we want to catch this, and this can be a 1 minute precision swing point. And so if we were shorting on the close of this with a stop up here, doing that, it'd be a lot better RR if we do this instead, right? Look at the difference in this RR. It's almost 6 times as more reward, right? So it's kind of dissecting the candle and gauging whether. Oh, okay. Here's a good way to explain it. So if I draw this all out, this is red. Okay. So we'd have the open or 15-minute candle. And then we'd have the close of 15-minute candle. So using the open, high, low, close logic, we opened, we made the wick higher, we made the wick lower, and then closed here. So this is essentially what? This is a 15-minute. This is a position swing point, right? One trades like this, another one trades like that. Let's just make it the same. This is a position swing point on a lower time frame chart. And then this candle here, it's already down here. So you can expect this this candle is probably going to be bearish, right? If given that we're already moving down. And this candle, this chart, we want to follow, right? It's lagging behind. This is bullish, this is bearish, this is a 1-minute PSP up here, and we're catching the top of this 15-minute candle. If that kind of makes sense. It's still fractal if 1-minute PSP forms after 5 minutes. Yeah, I mean, I would say, yeah, it's still, doesn't have to be within. So say if we have a 9 to 10 a.m. candle, doesn't have to be a 15-minute PSP within between 9 to 10. I'd say maybe shortly after, but I wouldn't say it necessarily has to. But I'd say I'd rather it be within the time frame of that PSP, the original higher time frame one. PSPs are predicted. Yeah, they can be predictable. So like this, when we see price diverging in this way, that's something we can predict. If price on both charts is doing this, consolidating around the open of the candle, it's going to be difficult to tell whether it's going to close. But when it's like this and it's so obvious that it's going to be a precision swing point, then we can predict it. But when they're both consolidating around, say if this line is open and they're both doing this on the lower time frame, you're not going to know, right, if it's a PSP. So candles like this, where it closes with such a small body, it's not easy to tell if it's going to be. It's difficult to predict those ones, so it's just gambling at that point. But this kind of price action, it's easy to predict a 15-minute or a higher time frame PSP, and then go into the lower time frame to catch the top or bottom wick, right? For example, in the Q2, Q3 zone, where price moves the most. Yeah. So does this answer your question? So yeah, it can be predictable when it's moving like this, but when it's kind of doing this around the open of the candle, it's difficult to you can't really predict it. So hopefully that makes sense. I haven't actually explained it like this before. So I'd screenshot this if I'll you guys. I mean, this is basically the blueprint to a 1 minute PSP or catching these sniper entries. Cool. Has anyone got any more questions on that? All good. Cool. So I think I was gonna do a little kind of going over your trades and stuff like that. So I think there's one posted in this trade reflection thing. Just open that. I think this was. I think this was Kyoshim. I don't know if I'm saying that right, but I think that was. You put that into here. So I guess we'll just go over this. And if anyone, yeah, 2 trades, cool. And then if anyone else has anything they took and they want to go over it or something, then just send that in the chat or whatever, and we'll take a quick look. Yeah, cool. So is this the first one, or wait, is this just the first trade, or is there execution, or is there was there an execution? Oh, okay. Oh, what have I just done? Oh, okay. So this is trade 1 and trade 2. Okay, cool. Right. So, Jules is your emotionally stable. So, I don't know if you just left these unchecked on purpose, but for example, was I emotionally stable? Like, first step is to recognize your mistakes. So, I'm guessing you haven't ticked this because you weren't emotionally stable. So, yeah, first step is to recognize your mistakes, which you've obviously done. And then second step is to work towards it. So the next day you trade, you're gonna make sure that you are emotionally stable, and a lot of it is to do with outside of your trading as well. Are you going through something outside of your trading? That's the kind of stuff that's gonna affect you, like being emotionally stable. So say if your goal just broke up with you, you're obviously not going to be emotionally stable, right? So it's making sure everything outside of your trading as well is fine. Cool. So this is a high time frame chart. We've got first stage, the hidden weekly cycle of YM. Cool. I can click on the chart as well. Yeah. So this one was this. This was Friday. Trade criteria, daily cycle, which you need to YM, no bullish high time frame. So price clearly bearish. Yeah, get more journey up to the low, so it's not clear. First trade entered clearly too late. Yeah, so it's after the move has happened, after the move you want to catch. Oh, okay, first day. After the move you want to catch has already happened, it's you have to let it go. It's that kind of FOMO. You can't feel FOMO and try to catch the move you already missed. Yes, there's that kind of phrase. If you miss the bus, if you miss the bus, what do? You wait for the next bus. You don't run after the bus. So let the bus go and wait for the next one to come. So I guess here could have been, I don't know if you want to use a 1 minute PSP, it could have been on this. So it's not after the move has happened, it's not catching that. It's waiting for a retracement. Price isn't just going to go and leave you. It's going to offer you some sort of retracement and a second chance. There we go. Gaps on years, second entry price taking out some ticks. So I guess this kind of stuff is unfortunate. It's difficult, really. Like, when was this? Let me get it on the charts. I'm actually going to screenshot that just for future reference in case I need to explain it. Of course, get rid of this. Yeah, so this was Thursday, and you're trying to catch this short. So this is a 1 minute chart. Yeah, 1 minute chart. So I'm guessing that's here, right? I think this was obviously really unclear price action. As soon as you recognize how choppy it is, it's just best just to step away. Just step away after this failed to move lower. This move should have offered more of a reversal. Once we see this just chop, it's just unclear, right? Lower probability. This is something that we just want to step away from. So this was when was this entry? 10:30. So yeah, you shorted somewhere in here. After this, you see this chop and it's just unclear. I think it's just best to stay away. First few after the top. Yeah. So I think my short. Oh yeah. So the short was somewhere like this. Oops. Stop here. So I managed to kind of fade all this choppy price action, and I didn't get caught up trying to enter on it. Luckily, I was lucky to do that. But yeah, once you need to be able to recognize how unclear this is and just be able to watch and just not participate in this. Yeah, I guess the first trade, it's kind of it left without you, and then you basically shorted here, right? So I'd say, yeah, just wait for price to re-offer you an entry. So for example here, let's have a look. What's it on? Here. So yeah, what you could have done, I guess, to be honest, I don't really see any entries after this. Well, here we have another SMT here. I guess it's not sequential, but it's another SMT. So you could have entered potentially after that. This candle also happened to be a 1 minute PSP. This 1019 candle bullish there. So if you're looking for another opportunity, it could have been here with a stop there, and you could have targeted maybe this low or then that target of these relatively equal lows here. So it's not jumping in. Don't jump into trades and feel that FOMO. Don't be scared you're going to miss the move. There's always other opportunities, and it's just being patient. And yeah, but I don't think I would have taken this trade given how choppy it was. Could have easily just, instead of moving lower, where is it? Instead of moving lower, it could have easily just done that. Yeah, is that all? Does that make sense? Yeah, the first one, I think it's just fighting that FOMO to try and catch the move. I can show an example of trade with two PSPs. So do you mean kind of another PSP, a PSP within another one? So that idea of fractal PSPs. Is that what you mean by two, or like two after each other? I'm guessing one within another. Have a look. I think on, I've got my kind of thing here. So Wednesday. So just kind of going into, I guess I'll give you a little hint on what I'm working on right now. This thing is with no high time frame sequential SMT. I've kind of developed a model to still catch moves. So if I go to the 9-minute chart, some source here. So onto the 9-minute chart, you can see this 9 AM candle was a precision swing point. So 9 AM open, 10:30 it closed. So this is PSP1, and we're looking at between 9 to 10:30. So we're going to look for another one inside of that. If I go onto the 1 hour chart, 9 to 10:30, this candle is a 1 hour PSP within that one, right? So now we dissect it even further. Let's go to a 30-minute chart. 30-minute PSP at open within the 1 hour and within the 90-minute. Go on to the 15-minute chart. What's this? Another one. 15-minute PSP within the 30-minute PSP, within the 1 hour PSP, within the 90-minute PSP. And if we go onto the lower time frame, what's this? A 5-minute PSP, right? Within the 15-minute, within the 30-minute, within the 1 hour, within the 90-minute. If we go on to the 1-minute chart, I don't think that was a 1-minute PSP. But you see my point. Oh, here. The 1-minute PSP. Here. So within, this was the 1-minute PSP. Within the 5-minute, within the 15, within the 30, within the 1 hour, within the 90-minute. The long. Stop here. I actually did take this, I think, but I put my stop here. I got stopped up. But you gotta put your stop here. Targeted. Whatever. The moon. That's that kind of idea of fractal PSPs. So even without high time frame sequential SMT, I'm in the middle of developing rules for a model surrounding, like, with no high time frame sequential SMT, which is what Day says we need, or what he's told us at the moment. And I guess it's almost been an hour. So that's the kind of, if anyone has kind of trades they want me to go over, I can go over that quickly. But I'll just give you guys, if not, I'll give you guys some little insight into what I've been looking at. If you have on high time frame more than one PSP, which you choose to draw with, so you can use all of them. You can just go deep. It's just dissecting the higher time frame one and go on to a lower time frame, and just keep moving down the time frame to dissect the higher time frame one. I guess to pinpoint to pinpoint this. So what the whole idea is, we have a high time frame PSP, and we're catching the bottom of that high time frame PSP using a lower time frame one. Hopefully that makes sense. Hopefully that answers your question. If you have on high time frame, yeah, cool. So yeah. So I'm gonna make more of a proper video on WAP, and I'll put it next to the other walkthrough video of the model we have. But I'm just currently working on, for kind of intraday trading, a new model, which is going to give us more defined rules around PSPs. So there's less ambiguity around what ones to look for. Alright, because at the moment, even me, I'm just flicking through time frames, trying to find PSPs. But this is going to be more methodical, like that high time frame sequential SMT and low time frame one. There's no noise. We're looking for monthly cycle, weekly cycle, and then daily cycle 9 minute. So I think I've talked about this before, high time frame PSP, the low time frame PSP, but what I've been trying to find is which ones to use. From where do we draw the line between higher time frame and lower time frame? So I still got a lot of backtesting to do, a lot of more data collection to do, but these time frames you can see up here, these are the ones I've been looking at. So I've been looking at, let's start here. Oh my god. This is what I've been looking at. These are the time frames for precision swing points I'll be looking at. And then of course 1 minute, we'll have 1 minute there, but 1 minute's just going to be for entries. So not this. So then after this entry, e.g. 1 minute PSP. So I'm not going to be including the 1 minute PSP in this. So I've drawn the line here. Let's make this thicker. I've drawn the line around high time frame, low time frame. That's here. So it's going to look like this, if that makes sense. There. So we have. I'm going to do it properly, of course, but one of these followed by one of these, paired with high time frame squelch of some T, and then lower time frame squelch of some T. This is what I'm developing now, and this is one of 3 models I've made. I don't know if I want to actually release the other ones yet. If I release it anyway, it will be to you guys in the mentorship first. But I don't know if I want to release model 2 and 3 just yet. So we still have these that I'm probably gonna keep behind bars as of now, because it's still some. I want to do some more refining on those and make sure that they're pretty good to kind of use before. So I've got a lot of backtesting to do. I've only done a few months worth, but I've kind of been go through a few months once and then I keep going over that, which is why it's taking so long. So I'm just going over the same days over and over again to really make sure I'm not missing anything. Then yeah, I've got, oops, what is that? I've got these. I've got these. They're getting ready to be released one day. For example, the 90-minute 1 hour to close, so you can. So it's kind of going back to what I said earlier with. Just get it out. There we go. So it's going back to what I said using this. It's predicting when it's going to happen. So we can predict. So I'm still predicting. But what that kind of thing does is it shows us which time frames to look at. So that's what I've been kind of trying to find instead of looking for like all our. So for example, if we had high time frame sequential SMT followed by lower time frame 1, a 15-minute and a 5-minute PSP isn't valid for this new model I found. Right? Of course, it may give us a move, but in terms of sticking to a set model, it's not something I'll be taking. Right? It's kind of going over this again. So for the 90-minute or 1 hour one, if it's diverging like this, for example, and we can kind of do that if that makes. Yeah, so I'm gonna make a checklist. So I'm gonna record a video going through it and upload it to make it easier, because I just the final refinements, I guess, on the model. Entry example of the one I just drew out here, or just another one. Full trade example. So so for this model I just gave you, I'm pretty sure Tuesday was a good example. I've got it written here. So Tuesday, that's the 1 hour chart. Tuesday was what, the third, right? So Tuesday, third. We had weekly cycle and then 90-minute. So Tuesday, boom. So first step is still Tuesday to sequential SMT for this model at least. So we have Monday low, Monday low. So weekly cycle sequential SMT. That's high time frame sequential SMT. High time frame PSP, 1 hour. go on to, I think it's a 5-minute chart. So 5-minute chart for 90-minute cycle. Yeah, same one I went over. So you have this. It closed. So there's 1 hour PSP. This was from 9 a.m. to 10 a.m. So it closed here. Of course, we already had a move happen, and we had no lower time frames conscious MT. That makes sense. So we had higher time frame PSP form and close here. Then we have to wait for a lower time frame conscious MT to take a trade, right? This is why I'm extending my entry time to 11 a.m. to give us more time. And then what we have here is the lower time frame conscious MT paired with lower time frame PSP. So lower time frame PSP would be 15-minute and 5-minute. So within this, we had this, and then we had a 5-minute PSP. Right? Boom. This is the model. This is basically it. It's more defined rules, so it's easier to know what to look for. So let's kind of go over it again. We had this weekly cycles conscious MT with the 1 hour PSP closing at 10 a.m. here. Right? Then we wait. We wait for a lower time frame conscious MT. Yeah, you can look for a lower one, but it's kind of, yeah, once again, going back to, we can look for one before the 1 hour PSP forms if price is doing this, as like in this example, where it's diverging like this and it's obvious to kind of predict. And I think I might make a video as well. Actually, I'll write it down on how to predict PSPs. So make video to. So in scenarios like that where it's easy to kind of predict when it's going to happen, you can you can look for one before, but generally kind of do it in this order. Or in this example, you would have done in this order because there was no lower time frame one before it. Anyway, but yeah, that makes sense. So there, high time frame conscious MT, high time frame PSP, high time frame PSP closed here. Then after that, we had a lower time frame conscious MT, and then lower time frame PSP here. And then for an entry, we can dissect this even further. So 1050 to 1055 is this PSP. 1050 to 1055. Where are we? Let me just get rid of this. So that 5-minute PSP opened here, closed here. What happened inside of that 5-minute PSP? This 1-minute PSP. And this can be your entry. So yes, Tuesday was a great example of this new model. And then you would target previous day high in this example. And this is what? A 1 to 16 RR trade. And I'd say that's pretty impressive. No drawdown on the trade. As soon as you entered, you could enter on the wick, or you can enter on the close, up to you. Even if you enter on the close, you still get a good hour. 1 PSP create before 5-minute PSP. So if I draw out this, so this is the range, right, of that 5-minute PSP. So opened 1050, 1055. So the open is here. This is the open of the, I'm going to make it different colors, it's easier to set. Red. So this red line is going to be the open of the candle. Okay, and then if I do the same here, open. Now, when this 1 minute PSP forms, you can see, so we're below the candle, open, right? We're all the way down here below the candle, open. On YM, on this 1 minute PSP candle, we're above the open. So it's already diverging. It's already this kind of divergence, if that makes sense. It's a lot easier to show in live time, but you can see here how, yeah, there's this divergence. So when it's catching, it's the logic of catching the top, the very top or very bottom of a higher time frame PSP wick. So in this case, the 5 minute is the higher time frame, and 1 minute is the lower time frame. So we're catching the bottom of that candle, right? So you can predict when it's going to happen, if that makes sense. So then entry could have been, say, when we tap the gap. Let me make this blue. Go back to the 5 minute chart. Yeah, so this was 2 minutes before the candle closed. This is entry. You can see, get rid of these. This 1 minute PSP was the bottom of the candle. So it's using the open, high, low, close logic. How we have to open, we made a high, we made a low, and we made a close. So we're catching the low, right? So instead of the close, so OHLC, instead of entering on C, we're entering on L. So we're getting in before. We're getting a better RR, better entry. Hopefully that makes sense. It is difficult to explain in hindsight, but hopefully that kind of makes sense. So it's all about predicting PSPs. And yeah, next week I'll make a video on how to predict a PSP, which, yeah, this kind of 1 minute PSP stuff, this is all from me. I've never heard of a 1 minute PSP being talked about before. Never heard of people predicting PSPs. So this is all my kind of concept, and it's just logic, just catching the low of a higher time frame candle, which has been mentioned before, but of course no one's actually used 1 minute PSPs with that. So yeah, is that all good? Does that all make sense? And yeah, I will make a recorded video. Oh yeah, I can try and make a recorded video using the model on live market as well. So yeah, and I mean, if it's happening in lifetime, of course, I'll let you guys know in the chart analysis section when I'm looking at it. So if I see what's happening in this model, then I'll let you know this is this new model that I'm going with, and you can see in live live time it happening. For this high time frame PSP needs to be 1 hour 15. So I'll just mention it again, and I'll kind of go over it in the video, but just to give you guys a little sneak peek. High time frame PSP, we're going to be using 90 minute, the 1 hour, so 60 minute, and 30 minute low time frame. We're just going to stick to 15 minute, 5 minute, and then entry can be 1 minute. But I'm like, again, I'm not telling everyone that we need to use this. So entry can be 1 minute PSP. They can also be an inversion fair value gap, whatever you want. So yeah, it could be 3 PSPs. So that's kind of refined, like tuning or pinpointing when the 1 minute PSP is going to work. So we get rid of, obviously there's going to be loads of 1 minute PSPs that happen. This filters when it'll work, giving you those sniper entries. For 1 minute inversion fair value. Yeah, I mean, yeah, it's still fine. But to be honest, I don't use, your normal ICT PD areas at all anymore. Like, I just don't really pay attention to it, to be honest. It's all just PSPs and SMT. That's all my trading really consists of now. But yeah, I think this live stream had a lot of value, especially with this is I think this is something that has never been talked about before by anybody really, predict and like catching this kind of stuff. So I would yeah, this is definitely something worth paying attention to. And this is how you're gonna get these crazy trades, these sniper entries and stuff. So yeah, I guess that's it. I should be recording. I'm hoping it's being recorded. Yeah, it's being recorded. So I will upload it on what today? I'll probably upload it straight after this, or I'll probably latest tomorrow morning. So yeah, cool. I guess that's it. Yeah, definitely some eye-opening stuff. And yeah, I'm gonna do some more back testing this weekend or tonight, probably Monday, Tuesday, and then yeah, I'll get you guys a video on that. Cool. All right. Thanks guys. Have a good rest of your weekend.